My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate, teach. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. Can't beat the numbers we got this morning. Last night I told you we had to root for weaker hiring and muted wage growth because that's what gives the Fed a reason to cut interest rates. And that's exactly what we got. No wonder the Dow gained 450 points, S&P shot up 1.26%, and the NASDAQ vaulted 1.99%. Now that we've finished with the Fed meeting and the labor report, I'm hoping we can focus back on individual stocks, at least just a little bit, not just the interplay between the bond market and the S&P 500. Remember, now that we have a clear signs of a slowing economy, we got to look at stocks with a bullish slant, because in this environment, we won't be fighting the Fed. Something we were very worried about in April. The numbers now tell us that those fears were unjustified. Just like Apple pulled back hard going into its good quarter, it reminds you that the critics and commentators can often lead you astray.
The House of Pain.
So with that in mind, what's with the game plan? All right, it all starts not Monday, but Saturday, when we hear from Warren Buffett, the Oracle of Omaha, who will no doubt be incredibly positive about pretty much everything, especially his portfolio. That could be bullish for Berkshire Hathaway, as well as American Express, Coca-Cola, Apple, and most of all, Occidental Petroleum, which is the stars of his portfolio. Hey, by the way, the whole thing's going to be covered by CNBC. I mean, I don't know what you're doing tomorrow. I know what I'm doing. Now, Occidental's especially trenchant as the oil giant reports on Tuesday after the close. Buffett loves it. I think Buffett will mention Apple several times. He's got a new phone coming. Maybe he's wise to that. He's going to hold on to the stock, I believe, even though it's a gigantic position. He'll also probably talk about how Berkshire's gigantic cash hoard can't be used. He can't find anything to buy. Still, the rosy U has worked far more than not. Monday morning should be a good day. Bears, beware. On Monday morning, we also hear from one of my favorites, Tyson Foods. I still think this is a bounce-back play. It's too cheap and despised on Wall Street for missing many quarters, but that was many moons ago. I like the setup of Tyson Foods. I have now called the bottom, and we've been right. After the close, one of my absolute favorites, Simon Property Group, is going to report, and this may put up some just terrific set of numbers. With that 5.5% yield, the risk seems low, while the reward may simply be just, I think, sensational. Remember, this is the highest quality mall REIT in the world. Simon Properties was on last time. I thought they told a fantastic story, frankly. Tuesday morning, we hear from Disney. Interestingly, by the way, just report in the evening. Perhaps that's the influence of CFO extraordinaire Hugh Johnson, formerly of PepsiCo, who leads what I think what's going to be a real orderly conference call for once. I think we should get some excellent numbers because of all the initiatives and cost cuts Disney put in part to fend off Nelson Peltz in that rough and tumble proxy fight. Aren't we glad that's over? Next. We're constantly on the lookout for anything good come from China, right? And we get results from Wynn Resorts on Tuesday night. Wynn owns 2 casinos in Macau, the Chinese gambling haven. I think it put up some good numbers, which is why we own it for the Travel Trust. The Chinese seem to be willing to travel locally, even as they eschew visiting here. Also at the close, this is a new one, Reddit reports. And I'm thinking they're going to put up some healthy numbers right out of the chute. Pinterest and Snap recently reported excellent traffic and advertising. Those are good comparisons for Reddit. I anxiously await a very positive story, in my humble opinion. Now we go to Wednesday, all right? Wednesday, we hear from Uber in the morning. Now, I wonder whether they might be seeing some impact of a newly revived Lyft, that David Rich is doing a good job, you know that, and possible sign that Uber's become too expensive to use. I worry about these things. I keep thinking that the negative report from DoorDash this week might be a little similar to Uber, and we could see as a suboptimal traffic number. When it comes to cars, we're also fascinated with Elon Musk, right, and Tesla, that maybe we ought to sober up and listen to Toyota Motor when it reports. It's becoming increasingly clear that the sweet spot for automakers is not EVs. No, the EVs is not, it doesn't really matter here. It's hybrid vehicles, where Toyota's long been a leader. I think they'll put up great numbers like we used to expect from Tesla. But remember, it will be hybrid. After the close, I really like ARM Holdings, and I think we could see some very strong numbers from Renee Haas and Company. That's the advanced semiconductor design firm that it kind of reminds me of Qualcomm. What a home run that's been. I'm also expecting a terrific quarter from Airbnb, but that's after listening to Expedia's conference call last night, where they talked about Airbnb's competitor VRBO having some technical issues that really hurt business. Hey, look, what's bad for Vrbo is most likely good for Airbnb. I mean, hey. Robinhood had a real good quarter last time, and I bet we could get another one. That's given how popular crypto remains, as we learned last night from Block, the artist formerly known as Square. Hey, by the way, Block is doing very well. The Trade Desk might deliver a good quarter, as there's been so much advertising money spent on streaming, and these guys offer an alternative to Google for digital ads. I really like Jeff Green's model. Oh, and we don't want to miss the tremendous production that will be the once-loved, now scorned AMC Entertainment. I still can't believe this $3 stock traded at $380 just 3 years ago. I saw GameStop going up at the end of the day today, and I just said, well, there's no accounting for taste. Now, it's been my experience that when you get a surprisingly good quarter from a good company, then there's probably more often than not another good quarter. And that's why I'd be looking into Roblox, buy some ahead of time. It's delivered an excellent quarter last time, and it should repeat it when it reports Thursday morning. Sometimes stocks just become lightning rods, and one of those reports on Thursday, and that is Warner Brothers Discovery. Yeah, I know, under 10, you can't resist, right? Two issues here. Will they keep the NBA contract? That makes them so relevant. And will they have lowered their debt? They need to go 2 for 2 if this stock's going to make it back to double digits. Next up will be Tapestry, the old coach. It's got to dress the FTC suit to try to stop its merger with Capri. I think the FTC actually may be onto something to try to block this deal. For once, they're genuinely trying to keep prices down for the consumer, even if it is for something that I would not describe as a necessity. It's more of a accessory. I thought of that myself on the fly. Now, Tapestry might be able to prove that there's a huge amount of choice in the category, and I think they can make a strong case to get the deal done. It needs the complete deal to make it as much money as possible for shareholders. Not that the current FTC cares that much about that point. And then, after the close, Akamai Technologies. Get this. Akamai reports. Now, this is one of the three content delivery technology companies, and the other two, Fastly and Cloudflare, both disappointed horribly this week. Wall Street thinks that there could be a slowdown in this department. But what if there's no slowdown? What if it's just Akamai taking share from Fastly and taking share from Cloudflare? That's what we got to find out. And there'll probably be the equivalent of pari-mutuel wagering on this one. Finally, on Friday, old Cramer favorite Enbridge reports there's some skepticism about the ability of this Canadian pipeline company to pay its dividend, which gives it a 7.3% yield. I think the dividend is safe, but we do need to see more growth. That's what I want out of a stock. Now, if I have a hope for next week, it's that we don't get sidetracked by different Fed officials who just feel the cacophony. They can't resist, right? They can't resist talking, and the cacophony and the confusion they give us by talking about the Fed's next move is just horrendous for pretty much everyone and everything. You know what? It's amazing to me that they're even allowed to talk about the economy in public. Have you ever seen Supreme Court justices talk about ongoing cases in public? That would be a huge scandal, wouldn't it be? It should be the same for the Fed. But the bottom line, now that it's clear the economy is having a meaningful slowdown, we no longer need to worry about the Fed becoming our enemy again, which means we can go back to glorious stock-picking mode, at least for like a couple of days, thanks to the benign employment number. Big improvement. I say we take calls. I say we go to Brad in Texas. Brad.
Hey, Cramer. How are you doing?
Brad, I'm doing well. How about you?
Doing great. Last time I called was about NRG. That was at $29. I think I'm up over 100% now, so thank you for that.
I like that. Congratulations.
Thank you. And I also loved your interview with that CEO of that one coffee company.
Yeah.
I can't remember who they were, but it doesn't really matter. But here we go. San Antonio has the most locations in the country. I physically went to all 28 locations and talked with the workers. The lines don't stop from open to close. The experience is a 10 out of 10. Customer service, 10 out of 10. Price points, 10 out of 10. Blue-collar workers are here every day. And with 177 million total shares and a 69 million share free float with a 10% short interest and earnings coming up, how do we feel about Dutch Bros?
All right, Dutch Bros reports this week. Now, let me just give you my one problem with Dutch Bros. Is that every time it lifts its head, somebody comes in, does some insider selling, and it just wrecks it. But I share your appreciation for Dutch Bros. But remember, the coffee market, I say it's gotten a little crowded? With the Fed meeting and the labor report finally behind us, we're back to stock picking mode for a couple hours. Talk about a big improvement. I mean, buddy, last time you called me about Cracker Barrel, I hadn't looked at the stock closely lately, so I did my homework, and I'm giving you my take. Then the travel boom has been a dependable theme for the last couple of years, and now that a few companies in the space have reported, I'm seeing if the thesis still holds up. And Generac fell 6% after turning in a top and bottom line beat earlier this week, but rallied since. So should investors view this action as a buying opportunity or a chance to get out? Why don't we do this? Let's talk to the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.